Good morning. Hope everybody's having a great Thanksgiving. I thought I'd jump on the computer and look at a couple stocks and give you my opinion. This is not financial advice. I don't do that. I'm not a financial advisor. And I'm going to teach you how to look at a stock and remove the noise so you can make your own decision with either by yourself or with your financial advisor. And our first stock here is NVDA. And let's put it on. And here's the daily chart of NVDA. And what do you see here? You see a lot of red-green candles. This is what you usually look at when you pull up a stock chart. But to me, this is useless. So I usually like to look at something with less noise. So the way you filter out the noise is you look at multiple time frames and you get rid of the candles and you figure out what the closing price is. So this chart here is set up doing just that. And you can see the little thin red line is 2 weeks averaged out. The white line is 4 weeks averaged out. And the little white circle is the price at close on Friday. And I'll include a little slide here that describes everything that's going on in that chart with the moving averages. And you can come back and reference this if you'd like. So this is a weekly chart since April, and you get a little more clarity. You can see what the 4-week average is doing. And if you come here, you see we peaked out at 131. But the 4-week average is basically going sideways. You have price discovery here. This is what we call price discovery. When you take it up, you take it down. And we took it up here, we took it down here, and then the price exploded. So if you had gotten out at 102, you would have lost a 30% increase of the price. The low here is 102, current price is 135. So this will scare some people. How do we get rid of this scary roller coaster ride? And what I like to do is look at longer terms. So now we have from June of, what year is this? I don't even know what year is it. 2023, June of 2023. We see this correction here. The price was $48. It dipped to 40, and it's been going up for over almost a year. It's been going up. All right. And so when you look at this chart, it's not so scary. It says, hey, my investment that I did a year ago, if you did it right at a year, the price was right here, $45. It's now $135. That's not a bad return for 1 year. So should I get out now and take my money and run? Well, according to this chart, do you see a reason to do it? Make your decision. What do you see once you start filtering out the weekly noise and look at just how the month ended? So what I do is I like to put little lines on my chart. So say $40 was my entry point at the pullback, and I look at all of the pullbacks or the corrections, and I make sure when I look at them that there is no lower low. So you'll see a pullback here, it has a new low for the month, comes up, has a new low. Those are corrections and those are normal. So right now, everything looks good. I don't see a new low forming that's lower than the previous low. So if you bought this long term, should you get out? Let's zoom in. And what do I see? I see we're up for the month. So even with all the noise, from the daily chart, which we started with, we're up for the month of November. So what's good? Month down or month up? Month up. Do you get out when you're month up? If you want to take a profit, you can. If you're in there long term and this is part of your retirement, and I would say talk to your advisor and see what he thinks. But at this point, I don't see personally why I would get out of the stock if I bought at the pullback. And so we're going to clear these drawings off here. And so now let's look at this chart. And what else here? I have an extra line right here. What is this line? Because this is not part of my descriptive. When you're looking at long term, you want to have a trend line that actually gives you some information. So this is the 8-month average. And what do we see on the 8-month average? It's pointing up. The 4-month average, it's pointing up. As long as it's going up, that means the price is increasing month over month, and it averages several months. Even our 2-month average is pointing up. What else do we notice? We notice the price of the month is dancing around this red line. You know, it's dancing around the red line. And here in, I believe it's 03, yeah, you saw it, the price actually get below the 4-month average. Whoa, that should get your attention. But should you get out? When did you get in? You know, if you got in here, you know, which I would not recommend to get at, you never buy the high, you always buy the pullback. And then you have this, you know, maybe you should think about your position. You buy high and sell a little low, it's not so bad. If you sell really low, you could lose half your investment if you just keep hanging and waiting. So the price over time gives you a good look of what's happening with the stock. So we had 2 months of drop, and then we got close to the 8-month average. When you get close to an 8-month average or a 20-month average and you know you have a good company, that's the better time to consider an entry point. Never enter when the stock is running. Go find something else that's a better opportunity. So for me, I would have considered, you know, with other things, entering when the price got close to a longer term average, and then it runs. And once we look at it, it never got below the 4-month average since that run. All right. The other thing you're going to notice here, this is the pullback. All the moving averages got really close to each other. That's an indication something's going to happen. You don't know. It could pull down, it could go up, but that's when you want to start looking at entry or exit points, when you see all these averages get close, because the buyers and sellers cannot make up their minds. Somebody is going to take control. And you need to pay attention at that point. So here from 2021 to current, we had a pullback period here. Good entry point. Never chase a winner. Wait until the winner slows down when you can catch up to them and then get in. So we had a huge pullback here. So if we bought at $32 and say, oh, it's a good company, 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 $11, you lost 2/3 of your investment, and you stayed in to hope. If we look at that whole time frame, what do we have going on? Every month is a lower month. We hit the 4 simple moving average. What are we seeing here? We're seeing the 4, the 8, and the 2 simple moving averages colliding, and then the price continues down. So hope and change is what you're hoping for, but there's no indication that that price is going to change. This is looking at the monthly average until we hit October, November of 2023. Let's look at the whole thing. We're going to put this back in. So this is a long-term chart. This was the 2023 dip, and then it's been good ever since. So you never buy at the peak, you always buy at the dip. Where the bottom is, you have to look for a reversal. And this is more than you need to worry about right now for more advanced people. This chart is a simplified monthly chart, and this is a healthy stock. I'm going to do another review on super microcomputer next, which kind of ran with NVDA, but then pulled back, and you're going to see a totally different behavior. So you guys have a good Thanksgiving, and if you're still here, I'll have my super microcomputer, which is a totally different view on trading.